Hey guys, what's up? Welcome back to my channel. Hope you guys had a great weekend. We are back again. What do we do here? We are here with the analysis. We are going to look at futures, US futures, dollar, and our markets, and some stocks for being positionally, for trading positionally, or even for investment purposes. So before wasting any time, let's jump directly into this. Let's begin with Nifty, Banknifty. That's where everyone finds their interest. So as discussed earlier, you see this trend line, right? Allow me to just clear it down for you. This trend line from here, it has been respected for the longest time, right? From around the 14th of December, we have seen a constant downtrend. There was a small fake move also here around the 25th of Jan, but then since it was a fake move, the market did fall horribly after that. So now that we have broken out of it, when will it be a confirmation for us is when we see a retracement or a retest of the trend line, right? Because trend line can be looked at from many different angles for a lot of people, for a lot of traders, right? For example, if you join this, right, if you join these points, this also very well becomes a trend line. Like this is the first point, this is the second point, and then this is the third point. So people can look at it in different ways, but considering what my analysis has been, I am considering this trend line to be broken out, as we have successfully broken out of it and we have spent 2 days trading out of it, right? So on a daily, what do I think where the markets are headed on a daily is, I think the next target, if at all the day high of Thursday is taken off, then we are definitely seeing 41,600. But how I visualize this to happen is, if at all we open flat or whatever, and even if we go here, right, we will definitely see a retracement to retest the trend lines. And then when we start our up journey, that's when it could be a time to go aggressively long in the markets. Right now, I'm not very comfortable holding longs overnight, especially because we have traveled almost 2,500 points from the breakout zone, right? From around 39,800 to we are trading at 41,000. That's 1,200, 1,300 points. That's quite a lot to be traveled in 4 days without any kind of retracement. So that's on a daily. This is how I look at the markets. I see if at all we open bullish and still continue a small little last upside, we might go to 41,500 levels and then slowly consolidate, retest, and eventually break out. So that's the time to go aggressive long. Okay, so that's on a daily. Now on a smaller time frame, I actually don't usually trade on hourly time frames, but just so that you understand and you learn from this analysis, if you notice, there was this entire gap pending, right? Sorry, I'll just make it clearer. This gap from around the 41,200 levels until the 4800, 850 levels, this was an entire gap that was pending, but the markets have been super bullish. And since the Wednesday 9 o'clock, since the time the market started, we have clearly filled that gap. We've even taken a small bit of retracement from there. Now looking at Singapore, we might open 50 to 60 points gap up, so that roughly translates to opening just above 41,200 if at all markets open that way. If they don't, anyway, we'll discuss all the three scenarios. So if we come down to a 15-minute time frame, right? Remove everything. I hope your chart also looks pretty simple and clear. The clearer your chart is, the easier it is for you to trade. Having all those 500 indicators on your charts really does not make a lot of difference. So firstly, what I would like to bring your attention to is, I hope if at all you're watching this analysis video, I would want you to draw this trend line that you see, because on a 15-minute time frame, the market has been respecting that really well. This is the first time the market came, we made a green candle. This is the second time we started moving up. This is the third time where we suddenly made a candle of almost 250 points. And on the close of Friday, or when was the last one? On the close of Thursday, we closed just taking support from the same trend line, right? So that was the reason I was holding a few longs in Bank Nifty. That's the reason to go long. Now my target for holding the longs was not a massive 500, 600 point target. What I thought was the market could make a double top kind of a structure here, where the markets could open flat, or if at all the markets open flat or slightly up. I was expecting a pull till here, till 41,250, 300 levels, and then consolidation, breaking of trend line, retesting or whatever. So for that small 150 to 200 points, I'm trying to play the overnight BTSC trade. Now the 3 case scenarios is, if at all the market opens flat, right? If the market opens flat, in that case, this entire zone from 41,250 until 41,000, this is clearly going to be a no trading zone for option buyers. No trading zone for option buyers. However, there's a small idea that I would like to give you because I might be doing the same thing. If at all we open gap up, flat or whatever, if you open flat, firstly, we do not want to take any trades in between this zone of 41,250 to 41,000. But if at all we open somewhere here, we see a little bit of retracement or a consolidation and we approach this trend line, right? My first intuitive attempt would be to go long here because the market has been respecting the trend line. And suddenly, if you expect any support or resistance to be breaking according to your favor, we are wrong over there. We are going to respect what the market is doing and take a small stop loss if at all it moves against our favor, because we would be taking a counter trade and making up for the losses against that, right? So in a flat opening, anywhere between 41,000 and 41,250, that's a no trading zone until either side is breached. If 41,000 is breached, that also leads to the breachment of this trend line. So our first target in that zone, if you open flat and breach the trend line, our first target is going to be 48.50, and that's quite a strong support. And in any case, even that is taken out. If you see a 50-minute closing below 48.50, then you are going to see 4,600 targets. Around that time, the 200 EMA on a 15 will also approach these levels. So that would again be a good time to long the market. If at all we see any kind of retracement or a fall from here, it is not that the markets are crashing, that the markets have turned bearish. It's only going to be a healthy retracement for a further stronger bullish rally. So do not go extremely short and do not hold large quantities in shorts, because markets in the near term and the middle term right now are bullish, rather super bullish in Bank Nifty, right? So be careful with your shorts. You can intraday short the market, but do not hold any overnight shorts. That is suicide. And if you open gap down, directly below 41,000, we are going to short for the same targets of 48.50 and 4,600. However, at every zone of support that we discuss, for example, even 48.50, I will consider longing the market first before shorting the market, because that's a personal bias, but I'm more bullish in the market than I'm bearish right now. Flat to bullish than being extremely bearish. So that's Bank Nifty. On a Nifty daily, again, as we discussed, this was the no positional option buying zone, and we've broken out. We have successfully managed to close above the 200 DMA. That's a strongly bullish sign. And now, if at all, looking at Singapore, how the markets are working out, sorry about that, looking at how the markets have been trading, if at all we open gap up, right, if we open anywhere above 17,640, our first immediate morning trade could be morning trade, or it could take some time. Our first trade from 17,650 is going to be 17,800 levels. So we still have space, a little bit of pull left in the long side. We could hold longs here. We could go long. If at all the day high is taken out from Thursday, we could book our targets at around 17,800 levels, right? But here, do you see this? I have clearly mentioned we have to book all our longs over here, because after that, I'm expecting, I'll show you what kind of movement I'm visualizing here. Again, as we broke this channel, right, there has to be a constant retest for us to have the significant conviction to hold longs, right? So if at all we go long here, and if the market does give us the space to go until 17,800, we could go here, hover around here, probably even retrace a bit, consolidate a bit, and eventually break out. And that breakout, as we discussed in Bank Nifty, is going to be a point where we are going to be aggressively long in Nifty. So give yourself some time. Don't have FOMO that we have missed this long entire rally. We are going to get a better rally, probably to all-time highs. If at all we consolidate, spend some time, and then break the 17,800 zones, then you could be long aggressively for a positional trade. So don't be in FOMO, just wait for the market to give you a setup. In Nifty, what's a trade plan going to be on a smaller time frame? As discussed in Bank Nifty, from here, if you notice, the market has been respecting this trend line on a 15-minute. It's still supposed to take a retest of it. This is the first time we started building this trend line around 31st of March. This was the second attempt, and market did rally quite a bit after that. So I'm expecting so now the trade plan for tomorrow is, again, the three cases that we discussed: flat, gap up, gap down. Pretty simple trade in Nifty, especially. If you open flat, any trade between, if you open flat, any trade between 17,630 until 17,500 levels, this is a no option buying zone. Okay, this is our no option buying zone. This entire zone between 17,630 and 17,500. We are not going to take any option buying trade, because markets could be noisy. They could create a lot of volatility and you could get stopped out. So trade plan for flat is we do not trade between the zone. But however, just like Bank Nifty, if we do find a retracement until 17,500 levels, firstly, it's a psychological level. They've got a lot of puts written there. And this trend line on a smaller time frame will be there to support the markets. So around 17,500, I will be looking for long opportunities, any kind of bullish engulfing candle, bullish hammer, any kind of bullish conviction that I get, I'm going to be looking for long opportunities. In any case, 17,500 is breached, then we could book targets, we could short the market for 17,400 levels, below which there's a strong support at 17,300, which I do not see being taken out before the expiry. So that's the plan for a flat, a gap down. Now, in case of a gap up opening, if you open anywhere above 17,640, that is Thursday's high, and if you manage to sustain the first 15-minute candle, we could go long as discussed on a daily, and we could hold a target of almost 100 points, 150 points from there, around 17,750 to 800 levels. But be cautious there and book all your longs at that very point, and then wait for the market to pull back to retrace, and we are going to join the bullish rally once it gives us a confirmation. So that's the plan for Nifty. US markets, US future. Oh, we were supposed to start with this, but anyway. You see this 33333 zone, that's the fib 6.618 level of the retracement from the time that the markets have started falling. Right, we discussed it in the last video as well. From around somewhere here when the market started falling, this was the 0.618 level, the 33,333 zones. So the market actually did break those zones, and very significantly it has been consolidating there. It spent 4 days there. And now what I expect the market to do is, I expect the market to be bullish. I expect the market to break these 33,600 zones and then eventually test this daily ka trend line, which is around 34,000 levels. So I still see a space of around 500 points in US futures, and that would allow us to be projected further upwards in Nifty and Banknifty. In dollar, as discussed, anyone who was watching the video, if you were short below 103, we made a low of almost 101.5. That's quite a lot on a dollar. What I expect here is, I do expect a little bit of retracement, and that could lead to our consolidation or little bit of retracement in our markets. We could probably go until 102.5 levels, and eventually, positionally, I do see 100.8, 100.5 levels to be coming in dollar, and that gives me the conviction to understand that the markets do have a bullish rally coming up. Now, when you come to stocks, I have clearly taken out stocks. All my stocks that I'm recommending for the week, they are intraday positional in nature. Now that depends what kind of a trader you are. For intraday also we could trade, but if you're positionally long in the markets, you have to do your due diligence to understand where your stops are, what your position sizing is, and do not be blindly long in a single script. Do not deploy more than 10 to 15% of your capital in a single script. That's a very, very basic rule in the markets. So to begin with, we have Manappuram Finance on a daily. If you notice this zone, this has been a very, very strong resistance for the markets from around the 21st of Feb, right? If you notice, the markets have been respecting this zone a lot. This was the first test, second test, third test, fourth, fifth. And now what I'm really happy to share with you guys is, we have successfully managed to break out of the zone and also spend 2 days consolidating there, accumulating there. So now the plan, intraday or short-term positional traders ke liye, the plan is, if at all we see any candle, a 15-minute candle, a 1-hour candle, I would say 15-minute because I'm comfortable with that. If you see any 15-minute candle, now this is for intraday traders or 1 or 2 days positional traders. If at all you see any candle closing below, above 127.7, you could hold longs until 131. That's almost 3.5%. So that could be a big target in Manappuram. I personally, if at all I was trading it, I would be trading equity options because I see momentum in this trade. So above 127.5, I would be long in Manappuram Finance for 131, and eventually, if you're positionally long, then eventually 140 levels. So that's, you also have bigger targets of 160. I'm personally going to be long in this if at all we close above 131 for around 160 levels. That's my plan positionally. Our second trade is Indigo. Indigo, in retrospect, if you notice, it has been trading between this channel. These are the points of contact that we notice. This is 1, this is 2, and very recently on the 29th of March, the markets have tested this zone again. And on the upside, if you see, around 16th of August and the 21st of Feb, the 1st of Feb, we have seen rejections from here, and these 3 places we've seen rejections from the downside. So we are clearly trading in this channel. Now what's interesting for me to trade this intraday or positionally is, I see momentum in this stock. The reason being, there's a gap pending and the markets have beautifully consolidated. So now, if at all you see any daily closing or any hourly closing above 1940, it's going to be a quick long trade in Indigo. I'm not interested in shorting the market. If at all we do fall around 1830, 1800 levels, I'll be looking to go long again. But for near term, you see any hourly or 50-minute closing above 1940, you have to jump into a long. I would even go with a call option. I would trade equity options in this because I'm expecting momentum in Indigo as well. Now, since I'm an options trader, I usually look for opportunities even in stocks that are going to give me momentum, whether on the long side or the short side. Momentum is what an option buyer needs. So I'm expecting a lot of momentum above 1940, and your first target could be 1990 level. That's 50 rupees away. That's almost 3%, 2.5%. So that's an amazing target for intraday, and this target could come really, really soon. So I hope you have these levels marked on your charts. Above 1940, we are long in Indigo. HDFC Bank. A lot of people like to trade HDFC. It's the heavyweight of Bank Nifty. Again, if you notice, been traveling in a channel, and now we have successfully broken out of the channel. So what's our trade plan going to be? If at all on Monday, that's tomorrow, if at all we start to travel anywhere above, you see any 15-minute closing above 1670, you have to go long. This could also be a very quick target. You have to go long until 1700 levels. You could book all your longs there because that is one of the recent all-time highs, and market has failed to go above it. So I'm expecting some consolidation or retracement at 1700. But there is a long intraday opportunity of 1670. We are going to go long for 1700. If the market does fall back down, for example, if the market consolidates here and retests the trend line, you see any bullish hammer here, it could, or an engulfing candle, it could be an amazing time to go long again because you're going to get it at cheaper rates around 1640, and then 1700 could be a target, and beyond that, sky is the limit. We could keep trailing a stop loss because that's going to be unknown territory, all-time highs. DLF, I'm extremely strongly interested in trading. I personally, even though I trade Nifty and Bank Nifty mostly, I might be trading DLF tomorrow because I see an amazing setup in this. If you had to discuss, it has been respecting the trend line for the longest time on a daily. This trend line has been supporting the market since the 23rd of April. We saw a retest on the 20th of June, and then we saw a cumulative zone of retest around the 22nd of Feb until the 5th of April. The markets have been taking support, and finally the markets have broken out almost. So I believe it's a very good time to track this stock right now because you have targets. On the upside, however, I'm sorry, I forgot to mention, on the upside, we also have resistance. So basically, it's traveling in a triangular channel. You see this 1, 2, and 3. These zones we have faced rejection from. So we are basically trading this parallel channel, and we have taken a strong bullish move from the bottom end of the channel. So I'm expecting to go long until the upper end of the channel. Now, what the trade plan could be? Now, I don't want you to just understand the levels to go long or short. I want you to understand the logic that I try to convey through this so that eventually, in due course of time, you can do these analysis by yourself, and I hope it benefits you. So if you see from the 22nd of December, the market has completely consolidated between this zone from around 382 levels until 340 levels. We really did not have direction. But now we are at the zone where the market is just about to break out. So if at all you're a risky trader, if your risk appetite does allow you to take slightly risky bets, if you open flat or slightly gap up anywhere above 383, you could go directly long with your stop loss below 380. That's a 1% stop loss for a target of almost 7%. So that's 1:7, right? That's mad amazing rewards. If you're a conservative trader, if you see any daily closing above 385, now what could happen is I'm expecting another big bullish green candle. If at all this breakout is real, I'm expecting a strong up move. So in FOMO of missing the up move, I don't want you to be stupid and just go long. If you're a conservative trader, wait for markets to take out 385 levels and then plan your longs for a target of 405, 406 levels. So that's DLF. Now for investment, two stocks I have. Let's be quick about this. I've got something to attend. Nelco on a weekly, if you notice, it has been traveling between this channel. This is strictly investment purpose. I'm not going to trade it, but if at all you're interested in investing, you see from these 900 levels, this is what it's supposed to look like. We started our uptrend from around 500 until 900. That's almost doubling the stock, right? Then again, we actually did double the stock. We touched 1000. Now we are back down. But what's interesting this time is on a weekly, if you notice, this is the weekly time frame. If you notice, the markets have taken support from the 200 weekly moving average. Allow me to move this apart. Markets have taken support at the 200 EMA that was placed at around 497, 500 level. So it's a psychological level, it's a 200 weekly EMA. And this trend line that you see, right? This trend line that has been forming from the 5th of September, the markets have been propelled down. we have finally got a closing, a weekly closing out of this trend line, and it has formed a morning star by taking rejection of the 200 weekly moving average. So it's a strong bullish sign for me. If at all you were going long here at 557 levels, your stop loss could be around 490, below 490 closing could be a stop loss on a weekly, but your target is massive. It's almost a 1:5 reward, and it's almost doubling your stock from here. So I hope if you find a long opportunity, please try to invest here. IEX is another really good script that has seen a lot of sell-off recently. On a weekly, if you notice, the markets did tend to rally quite a bit from the 23rd of August. From 130 levels, we had seen almost 290. That's more than 100% returns, right? And now we have sold out the entire gains. And just like Nelco, what's interesting here is on our 200 weekly, we have formed a strong bullish engulfing candle that takes out the last 2 weeks, right? This candle has literally taken out the losses that the stock has faced in the last 2 weeks, and that too making it on a 200 weekly moving average gives me enough conviction to go long. So above, if you see any weekly closing above 154, I would want you to go aggressively long in this. With your stop loss below 126, you could hold targets of around 260. That's 100 rupees on a stock that's trading at 150. So that is mad. That's 65% returns. So that's it from me. That's Nifty, Bank Nifty. I'm going to again mention down the levels for Nifty and Bank Nifty in the description box. The stocks you could take a screenshot of or understand my analysis and plan your trades accordingly. And I'm sorry about my absence. It's just I've been very busy because I've been at home with family. Plus, I am not within my setup right now. But forgive me for my absence, and I'll try to be more regular with this. Kindly do like, share, and subscribe to my channel. And if at all these videos add value to your life, to your trading, if at all you're taking trades based on this, do like and do comment and let me know if it's helped you out, or if there's any kind of modification or any kind of changes I could bring to this video that could help you out with your trading journey. So anyway, be safe, protect your capital, and let's start the week on a good note, and let's try to make as much money as possible. Be really safe in your trades. Do not be aggressively long. It's time for some consolidation or a pullback, so keep that in mind. Anyway, all the very best, and I'll see you guys tomorrow with another market analysis video. Do well, guys.